大家好，我是 Joe 啊，所以我是写这个文章的，每个礼拜出来，和我会现在谈在英文，我们的就是我在看这个美国市场有什么东西需要准备的。So anyhow, this past week we had a very large resurgence in the stock market after it seemed like there was a truce between the United States and China, in regards to the tariff. What you actually see when you go deeper down is like it's just a delayment of the tariff. It's not really resolving anything. They just sort of decided to extend the amount that they're the delay in implementation of tariffs by 90 days. In some sense, is a bit of a stalling tactic by China. So we're watching that very closely. What you saw is because these tension has eased, we saw a very strong movement within the Nasdaq. One of the things that I do tell a lot of my my subscribers is that within what we're seeing generally in terms of like the economic picture, and it's expanded over here, is that the United States is starting to enter into a slowdown economically. So from what I and the indicators are seeing, we are actually entering into a period where we're starting to see inflationary pressures, and we're starting to see a slowdown when it comes to economic activity. What's countering that is the Fed is actually starting to embark on a stealth QE program. And just very frankly, that's increasing the money supply. And a lot of that extra money is finding its way into risk assets. So what we saw in the US stock market is a rather large rebound from the fears from the tariffs. So if you take a look at like the S&P 500, this is sort of the large rebound that we saw. We saw a large rebound back up. And that's been largely driving the narrative that's occurred with the stock market. So economically, there's still a lot of slowdown. There's still a lot of very large concerns with the stock market. But the monetary policy itself is shifting, and the monetary policy itself can completely, buoy markets. What I didn't want to talk to you about today is, in terms of the highlight, it is the areas that typically do well during a more Republican sort of presidency, or where there's a more strong conservative administration, is you actually see a shift away from growth stocks or growth industries into value industries. And that is a major theme that I want to expand upon, throughout the next couple of weeks. So, Democrats typically favor growth industries, and those are technology industries, for lack of better words. So that includes healthcare, technology, maybe some industrials, but largely information technology. As the presidency has shifted, you're going to see, in my opinion, value stocks start doing a little better. And given where we are in the economic cycle, typically during a recessionary period, value stocks tend to do a little better. So value stocks generally include financials, some industrials, once again, energy. These are all stocks that Republican supporters typically own businesses in, or have business exposure to. So, a lot of stocks in the United States are now driven by policy. So I wanted to highlight one key sector, which is the aerospace and defense industry this week. As you can see, versus the S&P 500, it looks quite attractive. It's actually broken out from a technical perspective beyond the last previous high, which is generally a sign that there's some intense buying support. And so if you look at the S&P 500, we haven't even recovered back to the previous high yet, but that's already gone past that, which I think says something. If you take a look at like a relative chart, I mean, these are, once again, it's showing a very strong trend. And this is what our trend following strategy sort of takes a look at. We look at a lot of, we'll call it trends, and that's identified quantitatively, but we ultimately, basically I put on a fundamental sort of lens and sort of pick a couple areas that from a fundamental perspective require our attention. So once again, this is a very strong trend that's going on, and I don't anticipate this to really slow down. I mean, it's possible maybe right now is not the best time to buy, but this is a very strong trend that I think is going to be a very large hallmark of the Trump presidency. Trump's presidency, I think, will be substantially more volatile than Biden's presidency. And you see that, one way we're going to see that manifest, I think, is through additional geopolitical conflicts, particularly, higher tensions between the United States and China. And especially as we're watching like a bit of a proxy war develop between India and Pakistan, the need to put more assets into aerospace, defense, shipbuilding companies, I think is going to be a major priority of the Trump administration. So this is a sector to keep your eyes on and to watch. So other than that, I mean, if you want to take a look at the rest of this list, excuse me, where did it go? There are additional things that we've added onto the focus list. As you can see, the market has started a pretty large broad-based rally. Like I said, the Fed is easing right now. That tends to lift all boats. I mean, India had a bit of a pullback last week because of the Kashmir conflict, but now you're starting to see all equities start doing incredibly well, and you're starting to see risk start floating in. In fact, bonds are starting to become a bit more sold off as well. Like we said in a previous article, alternative assets, and particularly within commodities, is something that we think is also really interesting. Commodities typically do pretty well in periods where it is very volatile geopolitically, particularly gold. Bitcoin is interesting because that's sort of like the new gold. These are stateless assets that can't be really controlled by a single government actor. So that those are areas to pay attention to. And agricultural commodities, I mean, that's largely one of China's largest imports into the country. It's their agricultural and energy commodies, but we can talk about energy in a future episode. So anyhow, looks like the rally is broadening out a little, and like I said, we are keeping our eye on this. And if you have any questions, feel free to chat us up in the line group, and we will keep putting these out. We welcome any feedback. If there's anything that you particularly want us to cover or speak about, definitely participate in the line group, and we will cover that in hopefully a future section. Thanks, and I will see you next week.